Netflix announced their Q3 results. Is it time to buy the stock or is it time to sell? Let's find out. Cha-ching! In today's video, I'll be going through Netflix announcement of their recent results. This video will be split into 4 different parts. Firstly, I'll of course go through their Q3 numbers and see whether they did well or not. Then, I'll go through their Q4 guidance and maybe even a bit of 2021 to see what management thinks will happen moving forward. After that, I'll go through Netflix valuation, and finally, to round it all off, I'll give my thoughts on whether Netflix is a stock to buy or not. First of all, a fun fact about Netflix stock. If you invested in their IPO just under 20 years ago, you would have seen your investment go up by 400 times. Imagine putting a small bet on this unknown company called Netflix 20 years ago of $1,000 only to realize that this stock is now worth $400,000. Woo! I guess hindsight is 2020, right? We never knew. Netflix could have failed. Let's start with what Netflix reported around 3 weeks ago. Netflix Q3 revenue came in at $6.5 billion. This is an insane number for me, considering that all of this comes from their subscription base only of nearly 200 million subscribers. This beat estimates from analysts which took their data from FactSet and actually represents a 23% year-over-year growth for the revenues. In their Q2 earnings call, Netflix management actually provided guidance that their growth would slow down in Q3 and Q4 of 2020 because so many people signed up in the first half of this year, which is kind of revenue brought forward. You know, the time when all of us had nothing much to do and we couldn't leave our houses, Netflix obviously became the choice for most to keep them entertained. You guys signed up for Netflix, didn't you? That's how they got 200 million subscribers. Hopefully one day we'll have 200 million subscribers. Anyway, because of this, as I mentioned, a lot of their growth was actually pulled forward in Q1 and Q2, meaning the stock actually already moved up. So, in Q3 and Q4 of this year, this growth is projected to slow down slightly. A good sign for Netflix though, that in the first 9 months of the year, they've actually already added more subscribers than they did in the entire 2019. On how this translated to net income, Netflix actually maintained their gross margins level and saw a net income growth of about 18% year over year. This translates to around $800 million worth of profits in Q3 alone. Another very encouraging sign for the company is that they saw very big growth in our region being APAC, which saw 66% more revenue this time this year compared to this time last year. Having said this, the company as a whole only added 2.2 million, and I say the word only very loosely because analysts were expecting way more than this. Imagine working in a company where you just closed 3 months where you added 2.2 million new subscribers and everyone outside is still calling you a failure. What a tough world we're living in. With how highly Netflix is currently valued, I guess the criticism is justified. More on that later. Before that, let's get into a bit of Netflix Q4 guidance. As mentioned earlier, Netflix actually forecasts growth to slow down in the Q4 of this year due to how successful they were in the first 9 months. Still, they're forecasting nearly 3 times more new subscriber additions in Q4 compared to Q3, which see this increasing to around 6 million. That's a very bullish indicator for Netflix when they didn't really do so well in Q3. On top of this, they also expect operating margins to increase to 13.5% from just 8.4% last year, which is kind of in line with the ambition to improve this number year over year. When a company gets as big as what Netflix is today, it's a good sign to see management really steer away from just a revenue point of things to really trying to understand how this big amount of revenue can translate into profits. So overall, I think that 6 million new net subscribers in Q4 is a very good number, but we need to bear in mind that in 2019, they actually added 8 million new subscribers. Still, on a full year basis, they're actually adding 6 million more subscribers than they did last year, which is roughly a 21% increase, which I think is good. For those of you who are wondering, forward guidance is actually a very important aspect whenever companies release their earnings report for us to know where the stock will be heading in the future. For example, A company can report very, very good earnings reports with mind-blowing numbers, but then they say,
next quarter, we don't think this will happen again. It was a one-off thing and we're going to see revenues decline.
Don't just look at how well they did today or 1 year ago, but look at what management thinks will happen in the next 12 months. As of the 23rd of October 2020, Netflix is actually one of the largest companies in the world with a market cap of over $200 billion. Their relevance amongst consumers and their good potential for growth actually gives them a premium PE ratio of 79, which in comparison to other very high growth stocks is actually still quite high. This is of course also contributed by the fact that Netflix this year has seen their stock grow by about 50%, which translates to $70 billion worth of added valuation. This is massive, but it also kind of makes me question whether this increase is justified. Compare this now to Facebook stock, who, yes, is actually growing at a slower rate than Netflix, but at the same time has so much more revenues and profits than what Netflix has, and in comparison, Netflix looks extremely expensive. To show you what I mean, Facebook actually has a PE ratio of just 35, which means that they are half of what Netflix is valued at. Yes, Netflix has very impressive future growth potential, but so does Facebook, right? They have so much more to monetize in the future with the likes of Instagram, WhatsApp, and even Facebook Messenger. So in terms of growth potential, I'd say Facebook is neck and neck with Netflix. Sorry for straying off topic too much, but I hope you get the point. The thing is, we can't just look at one stock and decide whether it's expensive or not. We need to compare this to a similar stock which have similar growth potentials to decide whether Netflix is expensive or not. Now that we've been through their quarter 3 results, their quarter 4 guidance, and the stock's valuation, I'll share some of my thoughts on whether Netflix is a buy. Netflix is a beast of a company, and I have no doubts about their ability to grow from strength to strength in the next decade. However, I do also think that Netflix is possibly the weakest stock among all the other FANG stocks. When you compare their numbers to Facebook, Amazon, Apple, Google, Microsoft, then it's clear to see that Netflix is actually quite a bit behind. Competition-wise, they're starting to feel the heat. Amazon, Disney, HBO, they all want a slice of this large pie. If you're Netflix and you're doing very, very well in this one segment, of course, everyone else wants to be involved. Netflix thus has the advantage in this by having already a very big library of content and also having the first mover advantage, but they still have to be worried of the competition. I'd say that the biggest competition right now is Disney. The entire Disney group is performing really poorly this year due to lockdowns and people not being able to go to their theme parks or even being interested in buying their merchandise. The only thing that Disney has got going for them this year is of course the launch of Disney Plus. And it's no surprise that the entire company is now putting all of their attention into their new star product. Disney has one thing that no company currently has or ever will have, which is of course their large list of IP assets. During their launch in 2019, the CEO of Disney set an ambitious target of hitting 60 million paid subscribers by 2024. Well, in the summer of 2020, they already achieved that number. That shows how fast they're growing. With the launch of shows like The Mandalorian generating so much hype, it's little surprise as to how well Disney Plus is doing. These are films that Netflix will just never have access to, and this could potentially sway new subscribers or even potentially threaten Netflix's current subscriber base. Once Disney Plus comes to Malaysia, would you rather subscribe to Netflix or Disney Plus? Let me know down in the comments down below. While I still see the value of having a Netflix subscription, it's still something to look out for, and maybe Disney Plus will have a very interesting library. Who knows? Anyway, I don't think that this is the biggest problem that Netflix is facing. I still believe that they have a first mover advantage and their huge base can still work things out. The most unsettling thing to me is that up until 2020, Netflix is actually a negative free cash flow company. Even though when looking at their income statement, you can see that Netflix is actually a profitable company. But if you're an accounting person, you would know that this is only because of accounting standards. An equally important matrix to look at to know if the company is doing well or not is actually their free cash flow position, or rather their change in cash every single year. The thing is, this is an expensive business. Every time a new movie or a new TV show launches, Netflix will need to put it into their content library and will have to pay upfront for it. And by the way, these filmmakers of course need money to continue producing more movies, so It's something that costs Netflix a lot of money every single year. It's a never-ending game because Netflix knows that as soon as they stop adding new content to the library, their competitors will actually start to catch up. So for them, it's either they continue paying up and adding more stuff to Netflix, or they're going to start losing the customers to other platforms like Disney+. I mean, it makes sense, right? Imagine watching 4 seasons of La Casa de Papel just to find out that Netflix isn't going to add the 5th one. Of course, this doesn't make sense because the show is actually made by Netflix, but that's just an example and you get what I mean. So if Netflix one day decides I'm not going to pay upfront for all of this anymore, it's too expensive, I want to be profitable, as a consumer, I'd be like, I'll cancel my Netflix subscription. It just doesn't make sense to me anymore. Netflix needs to make sure this doesn't happen. To do this, where do they get their money from? Well, they've raked up so much debt just to make sure this machine keeps going. The combination of having a lot of debt to pay this off, issuing new equity, and the fact that they're not free cash flow positive until 2020 unsettles me as an investor. This year though, things have taken a change for the better. You see, Netflix in 2020 is actually free cash flow positive for once. However, there's a catch. This could purely be down to the fact that filmmaking has been put to a pause for the entire of this year. This means that no new TV shows are being produced, no new movies are coming out, and of course then Netflix doesn't have to pay film producers for adding shows into the Netflix library. I'm pretty sure all of you noticed this, right? There's suddenly no new stuff to watch anymore, and it's kind of sad because we're all stuck in lockdown. But we're not complaining because we completely understand why, and Netflix is actually benefiting from this cash flow wise. What we need to look out for is next year and whether Netflix can sustain this free cash flow positive impact moving forward. In 2021, Netflix management already gave forward guidance that they're going to start filming again, and this will cost them money. When they have new films, they have to spend more money on marketing, and all of this impacts their bottom line and their free cash flow. It may seem to you that I'm being a bit harsh on Netflix. I don't usually do this to other companies, but when you're worth $200 billion, I better be. Despite saying all of this, there's still so many things that makes me want to invest in Netflix. They still have the biggest base of any other streaming video on demand company in the world right now, with close to 200 million subscribers. That's 200 million subscribers paying money to them every single month. As mentioned earlier in this video, a lot of their growth is actually being fueled from countries outside of the US and Canada, which is actually a good thing because what we want to see Netflix doing now is expanding to the rest of the world. If they manage to do this well, which in truth they have been, then I see a lot more potential for Netflix to grow their business, especially outside of the US. Aside from this, Netflix also has the potential to become a very, very profitable business, similar to the likes of the Facebooks and the Apples of the world. This is because, if I understand their business model correctly, they pay an upfront fee to the film producer to have their content on Netflix for a certain period of time. To give an example of this, let's say Netflix pays Friends, the TV show, $200 million to have it for 1 year. This means that whether one person watches it or 100 million people watch it, the cost to show this is the same or very, very similar. This means that once Netflix manages to grow their base to around, let's say, the 1 billion mark, which is within the realms of possibility, then I'd say that their profits will start to skyrocket. Still, having said all of that, I'm actually not going to invest in Netflix stock. I just think that there's a lot of things that the management has to do very well for this company to continue growing. If this was a company that was valued less than $50 billion or $100 billion, then I definitely put all my money in there. However, with a valuation of more than $200 billion, I need to see more from the company. I could be totally wrong though, and Netflix will continue to go up to $1 trillion without me, but who cares? Sometimes you win, sometimes you lose. You can't win them all. What do you think about Netflix Q3 results, and would you invest in them? Let me know down in the comments below. If you want to invest in Netflix or any other stock in the market, you can use eToro, where I'll leave our link down in the description below. It really helps the channel and we appreciate your support. That's it for today's video. I really hope you guys enjoyed it. If you want to watch more, you can see our review on Stashaway after 6 months in this video here, or you can watch our review of Best Invest app here. See you in the next one. Peace out.